Hello guys, fairbinaryoptions.com here, and it is Friday, as you can see, the 7th of February, and we're looking at the euro, Great Britain pound with extreme interest. The reason for that is we would like to buy some put options with end of day expiration day today, because this still looks like a possible falling wedge. Now, like any falling wedge, this one goes from the end of the possible first wave and the third wave. So this to be the 1, 2, 3 trend line. Let me make it of a different color, and it should look something like this. So the 1, 2, 3 trend line, and then of course the 2 to 4 trend line. But the 2 to 4 trend line, it doesn't start from this highs here. So I would say that is not the high in the second wave, but most likely this one here is going to be the high. And the reason for that is that in such a pattern, the second wave is the most time consuming. How can we establish that? Well, first of all, we need to establish the moment that the pattern starts, and in our case here it goes from this moment of time, so from these highs to the downside. And then you'll just take two vertical lines from that moment of time like this. Let me change the color, and you put it on the right side here, so this to be the time taken for the first wave to form, and then the second wave should be more time consuming than the first one. As you can see, it is. In our case here, the second wave looks like a possible flat, because we have the B wave here that exceeds the lows in previous wave A, but this flat, as you can see, goes with a five-way structure here with this small rising wedge and fails to take the highs in the previous waves there, and therefore this is being called an irregular flat with a C failure flat, and then price goes and makes a new low. Our scenario goes for the 2 to 4 trend line to be this one, so that should be labeled something like this. So this to be the first wave, let's say 1, and then the second wave here, and the third wave to the downside, 1, 2, 3, the fourth wave here, and now we're looking for a fifth wave to come and, let's say, save the day. Normally when you're looking for a fifth wave in such a pattern like this one seems to be, the falling wedge, normally the fifth wave should go and pierce the 1, 2, 3 trend line. Basically this one should be pierced. While it is not mandatory, at least it should try for that area, and it remains to be seen if we're going to have something like this. Keep in mind, this is Friday, and on Friday the fixings are extremely important, in the sense that by the time the 16 GMT, the fixing in London is coming, then flows that pour out of the majors, out of the Great Britain pound US dollar or the euro US dollar, hardly influence the euro Great Britain pound cross, basically this cross here. So what I'm trying to say is that we're looking for this fifth wave to come to the downside, to try to pierce that trend line, but definitely to go and to threaten the lows in the previous third wave. Now, is this bearish for the euro US dollar as a currency? Probably so. We're talking about a 150 pips move minimum, probably even some more. And on a bigger degree, I would say that this is just a B wave for let's say a leg of a contracting triangle that is eventually going to go to the upside. But the bearish evolution, or the bearish move that the euro Great Britain pound has, is most likely due to the strength in the UK economy, and therefore this is our scenario. So let's write here that even though this is Friday, we would like to buy the put options with end of day expiration day today. So by the time today comes with Friday, we will say 21 GMT end of day expiration date. So let's write here that we are buying put options with end of day expiration date on the euro and Great Britain pound, and therefore this is our recommendation here. Thank you very much for being here. Keep in mind that this is fairbinaryoptions.com, and all this analysis and recommendations are possible due to the help of our sponsor Lionite. So make sure you go and check lionknife.com and see the offers there. Bye bye.